Good afternoon. Let's do some business. We are doing it live, cranking it out, and doing more at 4 weekday afternoons. We get right down to business here with the News Driven Hour right after Ben Shapiro and right before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money at 4, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Well, we just had a lower finish to a winning week for stocks. The market did close mostly lower today as the tech names took a hit, but major averages still posted gains for the week. The Dow did end higher by 16 points to settle at 39,150. The S&P 500 gave back 8.5 points to settle at 5,465. And the NASDAQ pulled back 32 points to end the week at 17,689. The S&P 500 did move up by 0.6% for the week. The NASDAQ eked out a gain of less than 0.1% for the week. The Dow was the big winner this week for a change, up 1.5%. Investors did pour money into tech funds at a record pace over the past week, with NVIDIA leading the charge, helping the chip designer briefly eclipse Microsoft as the world's most valuable company, also blowing past Apple. Roughly $8.7 billion flowed into tech funds over the past week, according to one report. The tech sector, of course, as you've been hearing on this program, responsible for much of the S&P 500's advance this year. Roll that has intensified in June, largely due to the influence of NVIDIA. We did see NVIDIA stock today pull back a bit, down today by more than $4 at 126 and change. That stock, of course, recently had a 10-for-1 stock split. Banks back in focus today, with the Federal Deposit Insurance Corporation and the Fed today saying they have found, quote, shortcomings, unquote, in the so-called living wills of 4 of the 8 largest U.S. banks, following a review of the plans of financial firms for winding down operations in the event of another global financial meltdown. They do these stress tests every so often. The banks face a deadline of July 1st of next year to provide resolution plans. The FDIC and the Fed said they identified a weakness in the plans from Bank of America, Citigroup, Goldman Sachs, and J.P. Morgan Chase. Regulators flagged the 2023 plans from Bank of America, Goldman Sachs, and J.P. Morgan Chase as containing weakness that raises questions about the feasibility of the plan. Now they have a chance to correct whatever weaknesses they found. This is one of those Friday news announcements regarding banks. The number we got today on the economy, the index of leading economic indicators, down for the month of May, declining for the third month in a row. According to the Conference Board, the leading index is a gauge designed to show whether the economy is getting better or worse. The leading index fell in May mostly because of weaker business orders, we're told, a decline in consumer confidence, and fewer permits to build new homes. Another reading shows the economy expanded in June at the fastest pace in more than 2 years, according to a couple of S&P surveys out today, amid growing optimism among business leaders. The flash U.S. manufacturing PMI, meanwhile, rose to a 3-month high, and the services index of purchasing managers also hit a 26-month high. Nervous time in the Middle East with new military action. Oil ending lower today, but up on the week as Israel-Hezbollah tensions rise. Israel's military struck Hezbollah targets in southern Lebanon. Oil futures did finish with a loss today, but did show a gain for the week as traders gauged the impact of rising Israel-Hezbollah tensions in the Middle East as the Israel-Hamas war continues, following the terror attack on Israel back on October 7th. Home sales numbers out today, falling for the third month in a row. Buyers dealing with a dearth of listings and soaring prices. Home affordability and availability, of course, continue to be big issues here in the Los Angeles area. Sales activity falling to the lowest level seen since January of last year, of this year actually, even as home prices hit a new record high. Unsold inventory also rose to the highest level seen since June of 2020. Former President Trump's new proposal to exclude tips from federal taxes getting a lot of attention. The Bureau of Labor Statistics estimates there are more than 2 million waiters and waitresses, or actors and actresses, across the country, with tips making up a large percentage of their income. I'll talk about that with leading taxpayer advocate Grover Norquist, president of Americans for Tax Reform, will be joining me live later this hour. And a bombshell ruling in Sacramento impacting taxpayers here in California. The California Supreme Court has taken a measure to limit tax increases off the ballot, handing a victory to Governor Newsom and other state Democrats who oppose this proposal. The justices ruled that the initiative, called the Taxpayer Protection and Government Accountability Act, would illegally revise the state's constitution. Now, a coalition of labor unions and local government groups said the court's decision would protect funding for government services, but on the flip side, business groups that supported the initiative slammed the court's decision as an attack on direct democracy here in California. I'll discuss this in great detail later this hour with Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, heard Tuesday nights here on 790 KBC and our great sister station KSFO in the Bay Area. But first, on your money, the markets, and the economy to wrap up the week. Joining us live now, money manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, also Forbes magazine contributor, and of course, longtime contributor to this program, which we greatly appreciate. Good afternoon, Ken Winans.
Hello, Frank. And you know what? I'm going to try to cheer up when I heard some of those news stories you gave. Thank God it is Friday. And
TGIF.
I would just start with, TGIF, yeah, absolutely. And I would just start with this. Typically June is not a great month for the stock market. The fact that in spite of all the headwinds we're looking at, whether they're geopolitical, political, economic, the market is moving ahead. And I think a big part of it has to do with the fact that and not only moving ahead, by the way, but it's also the rally is broad. There's a lot of groups participating in this, which is always a concern to we who are investment managers because we don't like narrowing things. But when you look at what's going on around the world, when I look, certainly we, look at what's happening in France right now, Europe is convulsing. And when that happens, money flows back to the mothership, which in today's world is modern day Rome. That is still the United States. So the inflows are going to continue as long as we have all these other things going on. And that we should all count as a blessing because, as I mentioned earlier, June is usually one of those so-so months that doesn't really produce great gains.
On the air live with money manager Ken Winans, and indeed a winning week, despite, of course, that wall of worry, which continues to be climbed here. We haven't seen too much of the summer doldrums. I know you track markets, the seasonal activity as well, and you're absolutely right. And we've been hitting record highs again this month, of course, with the S&P 500 and the NASDAQ kissing record highs. The Dow's been lagging its record winning streak lately, hitting that 40K mark and just above that not too long ago. But what do you make of the fact that the tech stocks are far outperforming the Dow at this point?
Well, keep in mind that, when we're comparing all these various indices, yes, the Dow is lagging the S&P 500, which is a market cap weighted index, which right now, no big surprise, but the bigger tech stocks have a larger percentage swing in that index. But what I'm more concerned with actually is when I look at a lot of other indices like the S&P 400 mid-cap. These are mid-cap companies that they've typically been the sweet spot of the U.S. economy. They're not too big. They're not too small. They're very nimble. That is having a so-so year, very similar to the Dow, and usually it wildly outperforms everything. The other one is the Russell 2000, which are smaller companies. This is directly tied to increased interest rates, cost of borrowing. So it's not an across-the-board rally from that standpoint, Frank. But as I mentioned earlier, there's broad participation in what's going on in a lot of different groups. And if you want to really talk about, and I think a lot of investors are going to have to do some soul searching with their advisors, is to take a good hard look at the foreign markets. As you know, long time I've been bringing this up, pretty standard in my industry. They tell everybody you've got to be involved in global markets, global participation. When I look at the exchange traded funds that are the country funds, which have been around for well over 20 years, and I look at the paltry returns of most of these, I mean, Hong Kong is down 10. France is barely up. France is down 2. Brazil's down 21. Mexico's taken, obviously, a huge hit. They're down 16. The point is, America is a really great place to be an investor right now in spite of all the bad news. And I think a lot of investors are going to have to rebalance their portfolios and really think through how they want to play out the next 18 months.
On the Air Live with Money Manager Ken Winans. You, of course, also have, as we've talked in the past, your own real estate index, Ken, and we see new sales numbers out today. Home prices appear to be at or near all-time highs despite the higher mortgage rates. What are your thoughts on real estate these days?
Well, the statistics on real estate are getting skewed because you are having lower sales. So you're then looking at, well, what's actually selling? Well, a lot of it are the higher-end houses that are not dependent on a mortgage. And you're finding that almost across the board. The other thing I would say, too, Frank, is in my real estate studies, I break the country into sections. And it's very clear. Certain areas of the country, the real estate market is doing well. Places like Salt Lake City, Phoenix, Las Vegas, it's not to say it's great, but there's still active buying and selling. We know what's going on in California and in Oregon and in Washington and New York, places that have heavy taxes, and certainly that the cost of borrowing is still very high and inflation's running high. It is difficult to get things done. And unfortunately, that is not going to change overnight. Real estate trends run in these almost glacial movements. So unfortunately, I don't see any big changes in housing really in the foreseeable future. It is what it is.
We're going to spend the next half hour talking about taxes and this big Supreme Court ruling here in California, which overpowered the citizen initiative that was to be on the ballot this November. And I know you have some important thoughts about what's happening here in California. I know Kevin O'Leary's also been on national television today talking about this, and he's been a frequent guest on this show too. But I want to get your thoughts about what's happening here in California from the tax standpoint, from a business standpoint, and I think you're coming to us from the state of Nevada now here, right?
I am. I'm one of many, many people who, I'm a fifth-generation Californian. I have two businesses, a foundation. It's all moved, every bit of it. And I think that I'm a canary in the coal mine. It is interesting when I go around Las Vegas, I run into a lot of people who say, I used to live in California. Frank, here's the thing, and I think everybody, we are in an election year, and I think Californians have to really think long and hard about this. If you want to know what's truly scaring the bureaucrats and the elected officials in Sacramento, it is we have this monster debt. We can argue about how the money was spent. That doesn't matter. It's the debt itself. That debt is going to be refinanced at much higher levels of interest. If Sacramento thinks they have a budgetary problem now, wait till that debt's refinanced. And it's not a surprise. They're going to do everything they can to defend, basically being able to raise taxes. Not to get too political, but I think it's something that I often tell people who are certainly citizens of California who are those investors. You actually have two votes. You have a vote at the ballot box, and you have a vote with your money and where you invest it. And I would just strongly suggest people that if you're not happy with how your money's being spent in California and you want to send a loud and clear message to Sacramento, simply put, stop buying California municipal bonds. I mean, I just talked to a client the other day who said they absolutely refuse to give any more money in municipal bonds to the UC system because of what happened with the protest marches. So you do have that vote. You do have that right. And if you do it through mutual funds, make it clear to your advisor, who probably will tell the people who run those mutual fund companies that you will boycott them. I mean, I dare say, call it a boycott, but you do have a right to stand up and stop this madness. And the only thing they will understand is when those sales slow down, and I believe the politicians and the bureaucrats will take note, regardless of their party affiliation.
Excellent points on the Live with Money Manager Ken Winans. And we've got to turn to crypto here to wrap up the week. Rough week for Bitcoin, Ken. Bitcoin back down to around 64,000 here now after hitting a record high earlier this year. And Ethereum up around, or down, I should say, around 3,500. Doge down to 12 cents here. Give us your thoughts about what's happening in the crypto space at the moment.
Frank, you crack me up when you're the Doge guy. I mean, we're going to have to get you like a Doge shirt or something to wear on air. Okay, so, I knew you were going to ask about crypto, and I just wrapped up my month-long research on it. Here are some interesting statistics. 64% of the time, the movement in the NASDAQ and Bitcoin and Ethereum seem to correlate. They're not perfect, but the more interesting statistic is quarter to quarter. 74% of the time, the movements are in sync. So this particular quarter, it's not going to work. But I would say this. I've done all the typical technical work I usually do on commodities. I've done it on the crypto. And as long as Bitcoin stays above its 20-week moving average, which correlates to the 100-day moving average, trend is your friend. It's still in an uptrend. Now, it has pulled back. Pullbacks are healthy. It gives people a chance to think about things. Many people on Wall Street are talking about it being a risk-off trade right now. I don't necessarily see that as much as it is just the ebbs and flows, and people are diversifying their portfolios in crypto. Diehard crypto people are no longer just staying with the big guys. They're venturing into stable coins. They're looking in other areas. That will continue. But as long as we don't see Bitcoin and Ethereum drop much lower than this, I would still say the trend is up, and it might not be a bad time to look at purchasing those, and especially for investors who use ETFs. You know, granted, you have the fee issues there, but it is an easy way to put things in the portfolio if you're looking for those opportunities. Jumping to go from crypto, I also like to just very briefly talk about what's going on in commodities. I get asked a lot, actually a lot of the audience, Frank, they call me because they say really very few people really talk about it the way that I do. I'm a commodity trader. I track these things every day. There is some bad news. The inflation picture is probably not going to change that much throughout the rest of the year. I know that a lot of people like to exclude food and energy. I think it's absolute nonsense. Those things impact people more than a lot of the other things that are built into the inflation complex. But as I look at it, things that are sweet, cocoa, sugar, orange juice, prices on these things have gone up all year. We're only 6 months into the year, and I'm looking at orange juice prices on the futures up 31% for the first 6 months of 2024. Cocoa, I've talked about it many times. It's an eye-popping 146% up since the beginning of this year. So very clearly, whether it's climate change conditions, geopolitical issues, but commodities are going to continue to bounce all over the place. And when you have that, you do not have inflation stabilized. So until that calms down, I hate to say it, but I just think we're going to have to learn to deal with inflation. And inflation runs many, many years in its cycle. So we just all have to inflationize our portfolios and not be hoping that something's going to change next year, because I just don't think it's going to happen.
OJ, back in the news. Yep, orange juice futures. As you said, Ken, thank you very much for joining us for that thorough assessment. Wish we had more time here, but we'll have to stop there. Ken, look forward to our next conversation. That is Money Manager Ken Winans, president of Winans Investments, market historian, author of Investment Atlas 1 and 2, also Forbes magazine contributor, longtime contributor to this program. Ken, have a great weekend, and thank you very much for coming to the line this afternoon.
My pleasure, Frank. Take care. Bye-bye.
Thanks again, and right out to the freeways now, 790 KBC. Folks, summer's here. The days are long, weather's warm, and swarms of tourists crowd the streets and freeways, and the pace may be slower, but the traffic, as you may have noticed, is heavier. You might be traveling, but with travel, you're driving in an unfamiliar place, and while you're having fun in paradise, unfortunately, accidents can happen. Now, if you've been hurt in an accident at home or away from home, don't let it ruin your trip or your summer. Call the compassionate team at Fielding Law. Clark Fielding understands the disruption and frustration that comes of being injured in an accident that was not your fault. Clark Fielding is dedicated to getting you the justice and compensation you deserve. Whether it's a car accident, slip, trip, fall, dog bite, or any kind of personal injury, Fielding Law is here to fight for you. Clark Fielding and his team of legal sharks at Fielding Law will help carry the burden so you can focus on recovering. You'll be treated like family. Fielding Law is a local firm that's familiar with the freeways and troubled spots here. Clark lives here, too. Don't let your summer be overshadowed by an accident. Call Fielding Law Firm today for a free consultation so you can focus on getting back to enjoying life under the sun. The number to call, 833-88-SHARK. That's 833-88-SHARK. Your path to brighter days ahead. ClarkTheSharkLaw.com. Mottek On Money continues here in 790 KBC. Good afternoon. Mixed finish to a winning week for stocks. The Dow coming in for a closing gain of 16 points to 39,150. The S&P 500 down 8.5 at 5,465. The NASDAQ down 32 at 17,689. Both the S&P 500 and NASDAQ pulling back from the record highs we've seen over the past week. The Dow did post a gain today, but is still well off its all-time high, about 1,000 points off its all-time high, which was achieved in the last month or so. The yield in the 10-year note is back up to 4.26%. Gold taking a tumble today, down more than $34 at $2,334.70 an ounce. Silver also taking a hit today, down $1.25 at $29.90 an ounce. NVIDIA, the so-called Magnificent One, pulling back more than $4 today, down $4.21 at $126.57. That stock's been on a roll. Became the most valuable company in the United States based on the market cap, blowing past Microsoft and Apple this past week. Apple shares down more than $2 today at $207.49. Apple, of course, also hit a all-time high just recently. Paramount Global shares, Class B shares, up 9 cents today at $10.15. Turning to the cryptos now, we see Bitcoin down about 30 at 64,140. Ethereum up slightly to 3,523. And there it is, Doge at 12 cents. And now the latest news for you right here on 790 KBC. Mottek On Money continues here in 790 KBC. Former President Trump drawing cheers from waiters and waitresses, also known as actors and actresses here in Southern California. The former president's new proposal to exclude tips from federal taxes, getting strong reviews and a lot of support. And turns out, according to the government, there are more than 2 million waiters and waitresses all across America, with tips making up a large percentage of their income. Let's bring in America's leading taxpayer advocate now, Grover Norquist, president of Americans for Tax Reform. Grover, thank you very much for coming to line on this big story this afternoon.
Oh, absolutely. And it's not just waiters and waitresses. Tips are quite a number of taxi cab drivers, Uber and Lyft drivers, people who do delivery.
The whole gig economy.
And all the whole gig economy. People who deliver the Washington Post to your door, newspaper boys and girls. And so there's a lot, quite a number of people, millions, and even more than the millions who get tipped income, hospitality industry, barbers, people who do your fingernails, do your hair. In addition to all those millions now, there are people who are now 30, 40, 50, 60, 70, or 80, who have very vivid memories of what it means to get an immediate tip from somebody that you were working with who said, that was a great job, and you realize that that money is yours, and then the government comes over and grabs a piece of it and says, you didn't do that. I'm the government. I did that. Give me my vig. This is a very good policy. And it's funny to watch the Democrats who like to say they respect and won't tax people who are middle income or even lower income or having second jobs. And they hate this idea because, of course, they like to tax low-income people and middle-income people.
And, of course, it reminds us of the unofficial motto of the IRS, we got what it takes to take what you've got, right?
Yes, absolutely. This is very helpful, but it reminds us there are a lot of little taxes the government has. I think some of the excise taxes, there's a 10% excise tax on guns that's supposed to go to helping hunters. I don't know why people would buy pistols to protect themselves in cities. Should be funding hunting something or others. But even when the Democrats are in office, they don't do anything for hunters with that money. They're supposed to, but they don't. So I think we should get rid of that 10% tax. We don't have a tax on going to church, First Amendment. We don't have a tax on reading books, First Amendment. We don't have a tax on newspapers, First Amendment. Second Amendment, we ought not to be taxing.
We're told President Biden is hunkering down to prepare for his big debate with President Trump, and President Trump's still out on the campaign trail, and certainly taxes expected to be a big part of that debate, and the contrast on taxes quite dramatic. We've talked about this, but let's revisit that. President Biden basically promising to raise taxes, just as Walter Mondale did in his debate with President Reagan back in 1984 when Vice President Mondale was challenging President Reagan that year, and President Trump vowing to lower taxes. What do you expect to hear in this debate coming up?
Well, I think that Trump will reiterate what he's been saying recently. He wants to take the business tax lower so we can be more competitive with China and Europe. to 21%. He said he wants to take it down to 20. He's also mentioned 15 and 18 as targets as well. Biden has said in writing that he wants to take it to 28, higher than China. He wants to disadvantage every American worker by having a higher tax on any business that they would work with than China does. So they will have to compete with lower wages because Biden wants higher taxes. That's what this election is about. Do you want to compete with the rest of the world on lower wages, as Biden does, or lower taxes and regulations, as Trump does?
That is going to be a dramatic comparison. And, of course, for those of us who were around, remember what happened in 1984 when Mondale made that pledge to raise taxes, and President Reagan did not raise taxes. And, of course, we had a landslide victory for President Reagan, who you worked with very closely to create Americans for Tax Reform, right?
Absolutely. And it was President Reagan who took the top margin, he cut all marginal tax rates, but he took the top one, which had been 70%, down to 27. So at the beginning of the Reagan administration, if you made 100 extra bucks on the weekend, the government took 70% of that. You got 30. At the end of the Reagan administration, if you earned $100 on Saturday, you got to keep 73. So it was $73, and so it's twice as much you got to keep. And every taxpayer saw the rewards to work go up because the government took less of their pay when they worked on Saturdays or an extra hour or a second job or got a raise. The government was taking less of their money. So this is a very important distinction between the two candidates. Biden, of course, wants also to tax your inflationary gains. One of the things Republicans have talked about doing is ending the tax on inflation so that when you sell something like and get a capital gains, a house, some land, a business, at the end of, you work 40 years building up a business, you sell it. Biden wants a 44.6% tax on capital gains. So he would take almost half of your life work. And if you live in California, because of the high California income tax, capital gains tax, it'd be 60% of what you built, what you and your spouse built during your lifetime, and you sell it, and that's what you're going to retire on. California taxpayers have to give 60% of it to the state and to Biden, if Biden wins. Instead, the Republicans are talking about abolishing any tax on capital gains where the gain is just inflation. Right now, 18% of anything that you own, the value of it was just inflation. But if you pay a capital gain on it, that's real money you're paying.
See it tonight, read about it tomorrow, but hear it now on Mottek On Money on 790 KABC. Aside from what you just said and this program and this station, I don't know where else people are hearing this important information, Grover, so thanks for sharing that. But as we get closer to the election, these tax issues and these comparisons that you mentioned and the dramatic differences in tax policy and tax rates and how it affects people, businesses, and individuals, that's got to be drawn into focus.
It does, and thank you for the opportunity to let me speak with people.
Appreciate it very much, Grover. Well, let's do it again soon, and we have a lot to talk about here in California. I'm going to be speaking to Susan Shelley here. You probably know Susan Shelley is a great taxpayer advocate here in California.
Yes.
On the California Supreme Court taking that measure to limit tax increases off the ballot. I'm sure you probably followed this and your reaction to what just happened here.
It is an outrage, and all those people who like to say that Trump threatens democracy, the California Supreme Court just vetoed democracy. California voters years ago put in the initiative process so that corrupt politicians couldn't stop things from being voted on, that this would be available for people. And the Supreme Court said, we don't like the people having a voice. We will kill this. I think that California's really got to rise up and deal with that court and the legislature, and the only tool they have is the initiative process, the democracy of that initiative process. And you know what? The New York Times is not writing headlines about the death of democracy in California. because they don't care.
Grover, excellent point. Thank you very much for your comments here today and your analysis, and, of course, all the great information you have for us on your website as well, Americans for Tax Reform. And look forward to our next conversation here. That is taxpayer advocate Grover Norquist, president of Americans for Tax Reform. Thank you very much, Grover, for taking the call here this afternoon.
Thank you.
Out to the freeways now, 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. What just happened? Bombshell ruling in Sacramento impacting taxpayers here in California in a big way. The California Supreme Court taking a measure to limit tax increases here in California off the ballot, handing a victory to Governor Newsom and other state Democrats who opposed that proposal. Business groups that supported the initiative slamming the court's decision as an attack on direct democracy here in California. And joining us live now is the one and only Susan Shelley, columnist for the Southern California News Group and host of the Howard Jarvis radio show, now heard Tuesday nights here on 790 KABC and our great sister station KSFO in the Bay Area. Susan Shelley, thank you very much for taking the call. Give us your reaction to this bombshell news here.
Well, thank you for inviting me, Frank. This is just terrible. This is a terrible decision for California. Essentially, what the court has said is that the government can decide how much money it wants to take from you, and if you try to control taxation in California through your powers of direct democracy, they're not going to allow it because they think it disrupts the government too much if people say they want controls on tax increases. So under this decision, probably Proposition 13 would have been taken off the ballot, although Proposition 13 was challenged and specifically was not taken off the ballot because there was no basis to do so. But this time they didn't care that there was no basis to do so. They just decided that all of this loophole closing and tax limitation that the voters were doing in this initiative, which received 1.4 million signatures and should have been on the ballot this November, the state Supreme Court decided they were not going to allow Californians to vote on it. It's an outrage. It's a dangerous precedent. It is going to cause many of these loopholes to become cemented in place. So, for example, the mansion tax in Los Angeles, which under the Taxpayer Protection Act initiative would have had to go back on the ballot to get the required two-thirds vote the Constitution requires, well, that's off because the Taxpayer Protection Act has been removed from the ballot. So now they can just take their loophole and drive trucks through it. This is a very costly and very troubling decision.
And this is seen as a victory for the ruling party here. Governor Newsom and other state Democrats cheering this. This would have been the Taxpayer Protection and Government Accountability Act that would have been on the November ballot. According to the justices, that would illegally revise the state constitution. The TPA was proposed by business groups as a ballot measure, but only the state legislature holds the power to put a constitutional revision before California voters. The court said, what about that part of the argument here?
Well, the trouble with the revision argument is that the courts have been revising the Constitution, and this was putting back what's in the Constitution. So how is this a revision of the Constitution? This is a revision of the administrative state that has grown up in this extra-constitutional manner, where power is delegated to state agencies, and they're creating things that cost billions of dollars in fees, and they're saying it's not a tax, and they're saying there can be no oversight. Well, the Taxpayer Protection Act would have required elected officials to vote on those fees. It didn't prohibit the fees. It just said that elected officials couldn't wash their hands of it and pretend they had no responsibility. They had to vote on it and be accountable to the voters. That's what it said. Is that a revision of the Constitution? I don't think so. And all of the precedents that all the lawyers looked at, and many, many highly professional, extremely well-qualified, long-experienced attorneys put this measure together and vetted it very carefully. It was not a revision of the Constitution. This was a completely political decision where the judiciary, which, by the way, has its budget controlled by the legislature, the judiciary worked with the legislature and the governor against taxpayers and against our initiative power of direct democracy, which we have had since 1911. This is an outrage, and it's going to be extremely costly for California taxpayers if something isn't done to reverse it. So there is no recourse on this decision, but we can come back in 2026 on that ballot with additional protections for taxpayers and fight it out. And, of course, the mansion tax is being challenged on different grounds. The Howard Jarvis Taxpayers Association and the Apartment Association of Greater Los Angeles in a lawsuit that is continuing to go forward. That lost at the lower court level. Loopholes that the court created that the Taxpayer Protection Act would have closed, but we believe that on appeal, it's a different story. So the appeal will be heard later this year, and we're optimistic that the courts will see that this is an inappropriate, illegal tax that was levied through the initiative process on property that has a certain value, a giant real estate transfer tax of 4% and 5.5%, crushing the Los Angeles real estate market. If this sort of thing is allowed to stand, then interest groups can go and stand on sidewalks with clipboards and get anything they want on the ballot, no matter how irrational or how much it robs other people of their property rights, and then pass it with a simple majority instead of 2/3 and direct the money to themselves in this initiative that they wrote. That's what the Supreme Court has empowered here. This is outrageous. And all that's going to happen if this is sustained is that businesses will continue to leave California and housing providers will sell their buildings and leave the state, and that will not help the housing shortage in California. This is a very dire situation. I urge everyone to join the Howard Jarvis Taxpayers Association, be a member, strengthen the voice of sensible people in this state who understand what's at stake at hjta.org.
And it should be noted, taxpayers are both Democrats and Republicans, so keep that in mind. And thanks for laying it out that way, Susan. And absolutely outrageous. And that so-called mansion tax is something we'll continue to follow with you very closely. Getting back to this Supreme Court ruling on this measure here that's not going to be on the ballot now, I see John Kupal, the president of the Howard Jarvis Taxpayers Association, joined other business leaders in releasing a statement on this. Today's ruling is the greatest threat to democracy California has faced in recent memory. Goes on to say Governor Newsom has effectively erased the voice of 1.43 million voters who signed the petition to qualify the Taxpayer Protection Act for the November ballot. That is very well put, and certainly want to make sure that statement gets out there.
Thank you for saying that. And I should also add that there are several really dangerous measures on the ballot that the legislature has put on the November ballot. One that would make it easier to raise taxes, one that would make it harder to ever do anything about it. So that's ACA 1, which makes it easier to raise taxes in local elections. It would cut down the threshold from 66.7% to pass special taxes down to 55%. So many more of them would pass. You'd see a tax increase on every ballot and after every election. And the other is ACA 13, which would prevent something like Prop 13 from ever passing again. And that is just outrageous. So we will be fighting both of those. They don't have proposition numbers yet, but they will. And the Howard Jarvis Taxpayers Association will certainly be getting the word out to inform voters about what these really do.
I've been following your social media feed too, Susan Shelley, on X, and as you point out, most people don't even know who the Supreme Court justices are here in California, right? And you think they'll be recalled?
Well, we're going to make them famous. They're never going to need a publicist for the rest of their lives. I don't know if recalls will be in the offing, but that is something that Californians do have the right and the power to do. That was another of our direct democracy powers. And Supreme Court justices may be recalled in California. So that is a possibility because this was an outrageous decision. As John Kupal said, out of bounds and destroying democracy in California. And it should not go unanswered by the voters of this state. People shouldn't just take this quietly. This has to be fought because everything is at
Susan,
stake.
thank you very much for joining us live here. We'll be listening for your program on Tuesday here on 790 KABC, also on KSFO in the Bay Area. Susan Shelley, columnist for the Southern California News Group, host of the Howard Jarvis radio show, who are now heard Tuesday nights right here, 790, as well as on KSFO in the Bay Area. This is Mottek On Money on 790 KABC.
Hey guys, welcome to the Candy Valentino Show. I'm Candy Valentino. I was a founder before I could legally order a drink. And for more than 2.5 decades, I've built, scaled, acquired, and exited multiple businesses in diverse industries. Now my goal is to help you by sharing the knowledge that I've learned, the mistakes that I've made, and the wisdom that I've developed over my journey. Bi-weekly episodes every Monday and Thursday.
The Candy Valentino Show, wherever you listen.